Everybody was speculating on the Bitcoin ETF. Everybody bought Bitcoin in anticipation of an ETF approval. Then the ETF did get approved. Then we saw indeed a lot of funds flowing into those ETFs, pushing up the price even further. But here's the problem. That Bitcoin ETF demand is slowing down. It's not just slowing down, it's reversing. In the last 14 days, we have seen net outflows, as in more money was flowing from the ETFs to the Bitcoin spot market than the other way around. So people sold Bitcoin. People did not buy Bitcoin. And this is very much against what most people thought, right? Most people thought this is just long-term accumulation by institutions. Most people thought this is maybe 401k demand. This is demand that will simply just lock up the Bitcoin forever. We will always see some kind of flows from the Bitcoin spot market to the ETFs. Those kind of Bitcoins won't move anymore and everything is fine, right? Bitcoin will go on its merry way up. But here's the problem. It seems to not be the case. It seems to be that also the Bitcoin ETF demand is more volatile than most people first anticipated. And so really now the big question mark is, how constant will that demand be? As in, when are we going to see net inflows to those ETFs again? When are we going to see that Bitcoin gets absorbed again? Or will the Bitcoin ETF simply just be another instrument to speculate on the Bitcoin price? And will it rather be something to ride those waves again, right? Whenever we are high in the Bitcoin price, also the ETF people in aggregate are going to sell and vice versa. It's very much possible, right? And even the people that might be buying the ETF for long-term holding purposes, they might still sometimes sell when the price is shooting up simply to rebalance their portfolios, right? So it might be that they're long-term bullish on Bitcoin, but maybe they only want to have, say, 5% of their portfolio in Bitcoin. Then Bitcoin suddenly shoots up by 100%. Then what do, right? You suddenly want to have 10% of your portfolio in Bitcoin. You suddenly want to have way more risk exposure to crypto than you initially anticipated. A lot of people that are in this professional investment world don't want that. They then simply sell. So they're selling in line with the price appreciation. So what in the end happens is that simply the ups and downs of the Bitcoin price will be more muted. The volatility will go down, the crashes won't be as violent anymore, and the ups, as in the rallies, they also won't be as massive anymore. So I will leave a link under this video that you can also monitor those kind of ETF flows. It's a Dune dashboard, so it's from Dune Analytics. On that website, we've got all kinds of interesting blockchain data, and there is a dedicated page just on those Bitcoin ETFs. And I personally look at that page pretty much every day. And I like to look at what is currently the ETF landscape doing. It's not necessarily the main driver of Bitcoin price all the time, right? Because right now in those Bitcoin ETFs, there's only around 5% of all of supply held by the ETFs. So it's not the main driver, but it's still a very interesting driver. It's still a very important driver. It gives us an idea of what the institutions in general tend to be doing. And that's always an interesting data point, right? It's always interesting to see what is retail doing versus what are the institutions doing, because that can give us some insight as in how strong is a potential rally. So I don't think it's the institutions that currently dictate the price. There's not like 50% of all of Bitcoin is in those ETFs. It's still just a small fraction. But I do believe that there's this important demand and that at some point that demand might become more important over time, right? I do believe that there will be inflows net over the next months and years. But I also believe that demand, that the inflows are more volatile than most people initially thought. And that's the point, right? We can't just bank on the Bitcoin ETF demand to stay at 5, 6, 7% annualized of all of Bitcoin supply, and Bitcoin then suddenly tripling every year. This was a nice idea when the numbers all look nice, but now it's a pretty shaky assumption that this will actually happen. I believe the Bitcoin rallies will be more muted, it will be all tamed, price movements in both directions won't be as violent anymore. And that is, on the one hand, of course, not so nice if you're pretty good at riding those waves. On the other hand, it might also help with further adoption. Because one reason why a lot of people don't get into Bitcoin is its volatility. And if the volatility isn't higher compared to stocks anymore, but the appreciation long-term is better than stocks because of the tokenomics, you still have a better risk-adjusted return. Right? This is how traditional finance think about it. They think about this in terms of Sharpe ratio. So what's my expected return relative to my volatility? And if you can keep the long-term return pretty high, because the token inflation is very low for Bitcoin, but at the same time, the volatility isn't that high anymore, then the Sharpe ratio goes up, right? Then the risk-adjusted return goes up. And this might, over the decades, be actually quite positive for Bitcoin. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.